reaction here?
Yeah, you have to be happy if you're an Apple shareholder. And hearing what Tim Cook is saying, that the loss from supply chain issues isn't as bad as anticipated. That being said, the expectations coming into this quarter were low. So you beat those expectations. You're still looking at, a slowdown. This isn't the company that was growing by a torrent pace during the middle of the pandemic. I know Tim Cook said the macroeconomic factors aren't playing in right now, but you're seeing the first decline in MacBooks since the pandemic began. And it's clear that Apple is, another company in this economy that's being impacted by these factors. There's no way around that.
Yeah, Dan Ives, we're still looking at a company with slowing revenue growth and slowing services growth. How do we get beyond that as we try and justify what is an above-market multiple for Apple, 24, 25 times versus where the S&P is 15, 16 times at this point? What justifies it?
Well, I think first you got to look at the ultimate install base. You're going to an iPhone 14 cycle where we estimate about 225 million iPhones have not upgraded in 3.5 years. All of our checks coming out of Asia actually shows flattish relative to iPhone 13. You combine that with the services that continues to ramp higher. Look, the Apple bulls are going to sleep well at night, because this was, if you checked every box, Cook really comes out smelling like roses relative to what's obviously a tough macro. You see a bifurcation in tech, and Apple, in my opinion, I think this is just ultimately just the start of the stock going higher after what's been obviously a tough year.
You want to address that valuation issue, too, because when we were discussing this, and maybe it was in the break and not on camera, you said expensive. It's not cheap.
Well, right. Well, so that was my issue back from 2015 to 2019 when they were only growing revenues around 2.7% per year. COVID hit and they have multiple expansion. So ultimately, as an investor, I own the stock. Can they keep this higher multiple when they have sales go back more towards those 2018, 2019 types growth rates? So I still think that's the question. But for today, people love Tim Cook. I think Tim Cook and Satya Nadella, win the prize for best CEOs navigating through this same environment we're all navigating.
So why don't you answer that question then, Dan? When they revert back to other, prior growth level, why do they deserve and how can they preserve to better say it the way that Bryn eloquently did, the higher multiple?
Yeah, and that's ultimately the key debate, bull bear. I view it as the services business. We believe is worth anywhere from 1.3 to 1.5 trillion. So on the sum of the parts, then the big thing that really now is starting to ultimately develop, you can have a $100 billion services business that I believe is over $1 trillion. You start to factor that in with the core golden goose, which of course is the iPhone franchise. I believe you could start to rationalize a valuation, even in this macro, that starts to approach $3 trillion.
It feels like, from what Tim Cook was telling Steve Kovac, Alex, China was better than expected, or at least not as bad as feared. You pick however way you want to describe it, because that seems to be the flavor of the moment to describe a lot of these tech reports. And I don't know how they pulled that off, but maybe that's one of the more impressive points in this report.
Yeah, you have to be thrilled reading those numbers from Cook if you're looking at the way that this stock is going to perform. We spoke last quarter about this. Dan was here. I was here. Dan called this a Tom Brady quarter, and then they went on the call, talked about the fact that they were going to, take a $4 to $8 billion hit due to the supply chain issues, and the stock dropped, and it's actually lower now than it was when we were here last quarter. So I think it's definitely a positive when you hear Tim Cook talk about the fact that it wasn't as bad as feared. But the bottom line is, it was still bad. And this is going to be something that Apple's going to continue to have to negotiate. We're already 2+ years into these COVID issues, and we're still feeling those impacts. And Apple is, really reliant on China to be able to deliver to its investors. So I think it's something to still watch. And I do think that it's a fundamental weakness for the company that's not over just because this set of lockdowns are done.
They get 19% of their revenue out of China, 24% comes via Europe. There are obvious FX headwinds that Jason Snipe are not just going to go away overnight, because, as Dan Ives said, Apple shareholders should feel happy today.
100%. And I think, what that major point of just China only being down 1%, that's amazing. Thinking about not only the supply chains, but all the shutdowns that we've seen in China across kind of the COVID spectrum. So I think that's very impressive. Apple has a ton of flexibility. They have over $100 billion in free cash flow. Free cash flow yields close to 4%. So they had the power and cash fortress to be able to navigate through this storm. So I continue to like the name here, and I'm one of the Apple bulls.